All right. Welcome to the Ninja Wealth Exchange Podcast, episode 29. So back here with my host, Johnny. How you doing tonight, Johnny?
Good, man. Glad to be on. Sorry, I was running a little bit late, and so we weren't able to hop on until right now. Uh, Outside of that, yeah, I'm doing great. Learned a bunch of stuff over this last week, and we're probably going to be going over some of those things here tonight. But dude, my brain has just been going since I got back, so
Oh yeah,
we're gonna we're gonna have to do something.
yeah. So yeah, I mean, just to fill people in, we spent most of last week in Pontiac, Michigan, right?
Hmm.
Not for vacation, because I don't know anybody that goes to Pontiac, Michigan for vacation. Um, but Pontiac is home to UWM, United Wholesale Mortgage, right? So they are the number one wholesale lending mortgage lender, right, in all of America. And they're a big partner. Their number one partner is NEXA, right? So NEXA Lending, which I'm a part of. And then you, Johnny, you own your own independent mortgage brokerage, right?
Correct. Yeah.
Name soon to be changed.
It's changed already. We changed it over to Alignment.
Okay.
Um, and so we ran into a little hiccup and had to rebrand. The
Okay.
rebrand has just finished, and so I'm pretty psyched about that. But man, I'm more psyched about what we're about to talk about. So
Right. Yep. So, I mean, this was something that we had even talked about in the past, just kind of passively in passing. But essentially, you were kind of curious. Hey, what does it look like at Nexa, right? You were kind of like asking me questions about Nexa, and I mean, you've been in the industry, the mortgage industry specifically, for probably what 20 plus years, right? Um,
yeah.
Me, on the other hand, I've only been in the industry, mortgage industry specifically, 1.5 years, right?
Hmm.
So,
Hmm.
you asked me a bunch of questions about Next. I'm like, I don't know. It's good for me. I wasn't able to answer a lot of your questions, right? You had more higher level questions, like questions from that a broker owner would have, right?
Correct.
And
Yeah. Yeah.
yeah, I wasn't able to exactly address those questions. So I'm like, you know what? Next time, let's just have you come out to the next event, right? The Discover NEXA
Hmm.
event. The CEO is going to be there. All the top execs are going to be there. Ask your questions, man. Whatever questions you got, go ask those guys, because they're the ones that are going to be able to answer your questions, not me. And we finally had a chance to do that. And so yeah, we spent a good portion of the week out there, and we heard a lot of information. I think we both learned a lot, right? Even I learned a lot about what Nexa does. I mean, I'm already with Nexa, but like I said earlier, I don't really know. I just know me, right? Just doing the basic individual loan officer stuff, right?
Hmm.
Uh,
Hmm.
that's all I know. I'm not at this level where I'm at this level where I don't really care to ask those bigger questions. I'm not there yet.
Hmm.
But you got the bigger plans, right? You're already a broker owner and all this. So we both learned quite a lot. And so in this episode, we're kind of just going to go through all the things that we learned about Nexa, how they're changing the game in the loan officer industry, what they're doing differently from all the other mortgage brokerages out there. And hey, you know what? If we're not recruiting or anything like that, we're just sharing what we learned. But if it at all intrigues you, if it interests you, reach out to us for more questions. So let's get
Yeah.
started here.
Absolutely.
Yeah. So one of the first things, of course, that a lot of people like to ask questions about, right? Anytime they take a new position or go somewhere, what's the compensation? How much am I going to make, right? Um, and so one of the CEOs, CEO of Nexa is like, I pay the best, right? I pay the
Yeah.
most, right? And so, he gets up there and he's like, have you guys ever heard what a purchase advice is, right? And honestly, like, if I wasn't in the LO game, if I wasn't at Nexa, I'd probably say no.
I didn't know, dude. I had
You
no
didn't
idea
know?
what that was.
Oh,
No.
really?
I
Oh,
was like, "What is he talking about? Like, where's he going with this?" Yeah.
yeah. So, I mean, purchase advice is basically, right, like, um, when we when we get a loan, right, we take out a loan for clients, right? Um, Sometimes we resell these loans on the secondary market, right?
Mhm.
And so there's, within that loan, there's certain things set aside, compensation for the loan officer. And there's like what do they say? There's like the basic like you can't really change it. It's like the lenders, whatever they charge, right? And then the loan officer
Mhm.
charge. And then it's like what is your company charge, right?
Mhm.
And that's really what the company earns, right?
Mhm.
And at at a lot of mortgage places out there, what we learned, they don't share the purchase advice, right? So this is like the full receipt of like exactly how much money is being made on a loan, right? And where and how much, right? And so it was very interesting. And we go through there's so the people are not in the mortgage industry, you know, and I was one of them, right? It's very confusing because you have banks, right? You have banks, credit unions, you have retail lenders, right? Which is like
Mhm.
your cross country, your fairway, your what are the big ones out there? Uh,
What is it? The
like rate, right?
Yeah, guaranteed rate.
Mhm.
Then there was another one, mortgage. The one that the Nexa bought the servicing department from.
Oh, uh,
Um,
movement.
yeah, Movement Mortgage. Like
Yeah.
those are all retailers. Yeah.
Right. So you have those, which well, yeah, you have retail, right? Which we refer to that, and then you have brokers, right? Which is us.
Mhm.
Um, so brokers, if you think like an insurance broker, if you guys are familiar with that concept, you're an independent shop, right? You're a broker, you're the middleman. So basically, you're connecting clients with the best lender partner that you have, right?
Mhm. Mhm.
And essentially, the main difference, really, the way that I think about it is that if you're a loan officer for a bank, for a retail shop, you're working for that company, right? The company that's on your name, right? That's who you're working for, right? That's your client. And then you're just trying to match your client, your customer's financial profile to fit within your company's box, right? Within their lending guidelines and all that, right? Um, Whereas us on the broker side, we actually work for the client, right? We talk to the client, we learn about their finances, their credit score, and then we're like, okay, we got your financial picture. Now let's go look at all the lending partners that we have, and let's try to find you the best one, right? So that's essentially what we do on the mortgage side, on the broker side. Um, Now, as far as compensation goes, I mean, the claim was that Nexa pays the best, and um, from what I understand, well, what I before I became a loan officer, I always thought that LOs like banks and stuff like that, retail, they only made 1%, which in loan officer speak is 100 bips, right?
Or less, yeah. Or
Or
less.
less. Right, or less. 50, 60, whatever. But then the thing is they also do get a base pay, right? So they get a base pay. So it's a W-2 job, right? You get a base pay,
Mhm.
you get a
Mhm.
commission, right? But your commission on each loan is only 1%, right? So 1% of the loan amount, guys, not the purchase, right? Not the purchase price. Because loan officers only sell loans, right? So then to me, I was like, 1%. That's not really attractive, right? Like I'm sitting over here as a real estate agent, like we make like, 2 to 3%, right? Anything
Mhm.
between there, right? Usually, right? Of the purchase price, not just the loan amount. And I'm like, I think it's probably better to stay on the real estate side. But then again, the other thing is that the the real difference between a realtor and a loan officer, as we've said in previous episodes, really is that LOs, they can do a lot more volume, right? They can probably do 10 loans a month and not break a sweat, right? That's just
Mhm.
right.
Yeah, absolutely.
Whereas us on the realtor side, I mean, if you're doing 10 loans or 10 transactions a month, you're probably gonna run around with your head cut off, right?
Mhm.
uh,
Absolutely.
so yeah. So there's a big difference, right? There's a big difference. But yeah, so then of course, I was thinking, okay, well, the volume probably makes up for it. But then when I started learning about Nexa, someone my when I got recruited to Nexa, I my guy that brought me over, I was like, so how much do you pay? Do you get paid? And he's like, dude, we make anywhere from like 2% to like 400 or 4%, right? Well, first he said 200 bips to 500 bips. I'm like looking at him confused, like, what the hell does that mean? Like, because on the realtor side, we don't talk like that, right? We don't talk bips, right? It's confusing
Right, right.
for us realtors. We don't talk bips, so it translates to 2% to like 4%, right? And I'm like, what is that for real? And he's like, yeah, it's legit. I can show you. And I was like, really? Okay. Now you got my attention. So I mean, with all that said, you know, uh, it is true. It is true. I mean, for my 1.5 years here and for my limited time at Nexa, I almost feel like I'm very spoiled, right? Like I go around, I talk to loan officers, and they ask me, "Hey, how much do you make over there?" Or how do you like your new gig as LO? And I'm like, dude, I love it. And I tell them how much I make, and their jaws drop. They're like, what? Because they're sitting over there wherever they're at, and they're making like they're lucky to make, like you said, like 1% or 100 bips, right?
Yeah.
And they're like, no way. I was like, yeah.
Yeah, let
Yeah.
let me add some stuff,
Yeah,
man.
go ahead, go ahead. Yeah, yeah.
Like there's so much
Mhm,
to this whole loan officer gig, right?
mhm,
And every single person, um so we work for brokers, right? So we're technically called loan mortgage loan originators, right? We're not technically loan officers. The term is a little bit different legally, right? Loan
right,
officers work for a bank, we work for brokers. So now now the payout is completely different, right? When you work for a broker, you're going to get paid more. But when you work for a let's say a bank, you're going to get paid much less because they have branding and supposedly they're going to bring in more clients for you and do more business with you, right? So like most banks, when I was working inside the banks, what I saw was between 35 basis points and 65 basis points. And to get to the 65 basis points, you had to have closed a few loans already, like maybe about 3 loans or something like that. And so, like, I'm looking at this and I'm like, yo, like they're making good money. Like, no doubt about it. They're making most of them are should be able to like if you're a good producer, you should make about 6 figures, right? And I'm like, that's really good money. Um, but then when I went into the broker world, the broker that I was with and even my brokerage, we pay between okay, so you guys know a basis point, 100 basis point equals 1%, right? So that's how it translates. So a basis point is a percent of a percent. And so I was making about like 65 basis points to 100 basis points when I first started. And then when I opened up my brokerage, I made about 200 and on average about 275 basis points. But man, like what's really powerful, Laura, is at Nexa, you can actually go up to 400 and they have ways to do that, 400 basis points. They have ways to do that a small brokerage like mine has a really hard time doing, right? The reason they're able to do some of those things is because they're at scale, right? And so when you see that, if you're like, to be honest, I think if we told any loan officer, hey, come join us. We're over at Nexa and we pay up to 400 basis points. I'm pretty confident they're going to come over just because the pay rate is so significant, right?
mhm,
So I think that that's important for people to know, right? And like I'm not going to go over the details of how you can do some of these things, but like I can't do that with my brokerage. I can't pay out to my loan officers 400 basis points. I can't even pay out 300% or three basis points, right? Or
mhm,
300 basis points. I
right,
can't pay 300 basis points. It's like 3% is just insane. Like my company barely makes that, right? But I
Mm.
think that, with Nexa, they have other revenue that's already paying for the existence of the business, but all of their business are cohesive, and so they work together. And that's one of the reasons why they can offer things that nobody else can offer. So I completely agree with you. I think Nexa, um, I'm not sure if they're the best in the industry because, I don't know what everybody's payout is,
Yeah.
but man, this is definitely the best one I've seen so far. Right, best one
Right.
I've seen so far. And I think that that's just, I don't know if that makes sense, but I think that speaks volumes as to what Nexa can do in comparison to other shops.
Yeah. So I mean, just so that was a good clarification. And then most brokerage shops out there, right? They are either charging a flat fee, right, per transaction,
Mhm,
right?
mhm,
But Nexa does a little bit different. They do like a split, right? So they take a little split for the company of each transaction. But the nice thing is they actually do have a cap, right? So they have something called the Nexa 100 program, where if you meet the qualifications of Nexa 100, you actually keep all of that split money, right? So that comes right
mhm,
back to you. And they do that through, like you mentioned, just having scale and the ability to be able to afford to do that, right? So
mhm.
that's very powerful, so yeah, compensation was definitely something that's is motivating for a lot of people. Definitely a lot the first question that goes through a lot of people's heads, right? Um, but yeah, let's move on to uh the next thing, right? So the next thing is, like we mentioned earlier, brokers, right? We have lending partners that we try to connect our clients lending profile with, right? And
Mhm,
again, the Nexa has the most lending partners. Currently, there's 308. So there's 308 investor lending partners that we can shop our clients' loans against, and that is like a ridiculous amount of partners, right? That we can pull one person's credit, and then we can go shop across 308. Um, but really, at the end of the day, that really just provides us and our clients with the most options, right? That means we can better serve not only retail home buyers, right, but we can help investors who are, whether they're buying residential, small commercial, um, a company, right, or even RV parks, and then they even mentioned that we even do business purpose loans. So there's like so many different uh, loan programs that we have available for people. So,
Yeah, including reverse.
oh yeah, yeah, reverse
Yeah,
mortgage,
reverse
right,
mortgage. Yeah.
right. Yeah, and if you're not familiar with reverse mortgage, uh, that's definitely something that's very intriguing and going to be very relevant, especially with the amount of baby boomers out there. And so, just real quick, I mean, reverse mortgage is essentially using your house to pay you monthly, right? Like
Mhm,
if
mhm,
you have to qualify based on your age, right? There's certain limitations to this. So it's kind of like using your house as a retirement plan, really. And so you're drawing from your house, and every month you're going to get like some kind of living money, right? So
mhm.
imagine instead of paying the mortgage, the house is paying you, right? And so
Yeah.
now you have a little bit of spending money, living money, right, to cover your bills, buy food, whatever, right? But then the idea, of course, is that hey, you know what? If you do pass, right, or when that time happens, um, hopefully your house still has equity, and then you can sell it, right? And basically, you pay off whatever your balance is that has accumulated at that point, right? And you still have
Mhm,
excess.
mhm.
So yeah, that's something that's very cool. That's going to be coming soon. And I don't know, what are your thoughts on having that many partners, Johnny?
So I'm gonna be like super honest, right? Because I'm a
Yeah.
broker myself, and I'm able to. I used to have about 280 lenders, right?
Mhm.
That I worked with,
Yeah.
but it becomes super overwhelming, and
Mhm.
so I picked the one that has like the best of everything that I need, right? And I probably work with much less than 300 lenders or investors. But what I really like about it is that if you need it, it's there, right?
Mhm.
And me as a lender, I have to maintain this stuff, right? Like what people don't know is behind the scenes, we have to report to them with our P&Ls every year. We have to make sure they understand what our quarterly results look like. We have to update them with all kinds of documents, right? So it's a lot of work. And for me as a broker, I don't want to do all that work. So we're only going to keep, like a good like 20 at the most, but usually it's 5 that you do most of your transactions with. And so, like, I don't really keep more than that. But hey, if Nexa's already doing it, it gives you the ability to use whatever it is that you need. Like, I know that I didn't have reverse. One, I didn't understand it enough, right, to really, really do it. And two, I didn't believe in it. But now that I've seen other people use it, I really think that it could really help some people. And so my thoughts are is that having this many lenders and investors and partners with you, not only does it improve you from a perspective of having more types of transactions, but now you have that many more account executives, right? Who will support you in your business. And I think that, it might be overwhelming, dude. Like if you just had them one call you per day, they would have the whole year, right? So, and the account executives, they like to call you and just to touch base with you. And so
Mhm.
like currently I have one that's like really good. She's always like, hey, let's do a business session together real quick, and we'll take about 30 minutes to go over what new stuff she's seeing, how to do things, how to make things better, what's more effective than the other thing. And it's super helpful. Right now, I'm not saying every AE is like that, but for the AEs that do that, that's huge. Like if you business plan with me, I think that's huge. And so, um, I think this is definitely an opportunity for those type of for people who don't have that many lenders, that don't have that many options. When we were at the bank, dude, we were only doing like a paper stuff, right?
Oh, sure.
If you hadn't like someone that came in with a 580 credit score, we're probably not going to work with you, right? Um,
Wow.
but the
Yeah.
thing is that this opens up the opportunities to do things that you probably um, banks can't do, other brokerages because they are not this size can't do them. And so I think that it's pretty cool. It's pretty cool.
Yeah. Yeah. No, I 100% agree with you that, yeah, while you have 300 plus whatever, you are probably realistically only going to use maybe 5, right? Most of the time. But that one time that you do have that unique client that wants to do something a little bit strange, you're like, huh, let me go look. Let me go check my Rolodex of 300 people here and see what they can do, right? So,
Mhm, mhm,
yeah, yeah, and and I have had to do a complicated file where the borrower didn't have a credit score, right? When I pulled their credit, it just came back with no score. And if you went to apply at a bank, the bank would have told you, no, we can't work with you. There's no products here for you, right? Um, Even UWM doesn't do that, right? They can't work with people like that. And so I had to go to another lender that does FHA manual underwrite, and so they were willing to do it. So I was able to help somebody with a pretty complicated file be able to buy a house. So that's pretty cool. So all right, let's move on to then they went on to showing like the tech, right? The tech at Nexa, right? And what's
mhm,
coming soon down the pipeline, right? Um, with the loan origination systems that they have at Nexa. Currently, right now, we have two platforms that we use. Lending Pad, which is kind of older, and then there's Arrive, which a lot of people seem to like. I haven't used that one yet. I don't know if you've ever used it, but apparently the interface is really nice, and the customer service, the response out of that system is really nice. It's supposedly a lot of customers like it because it's very intuitive and very easy to fill out an application and also watch their loan process go through, right? That system will automatically alert and message the borrower when certain things happen in the loan process. But at this event, we got a little bit of sneak peek view of the brand new AI based loan origination system, Bevery. And so that's going to be released, rolled out to the company this coming week here. And so I thought that was super cool. I haven't used it yet. We did have access to the beta version for a couple months yet, but I didn't want to learn it honestly because I didn't want to. I didn't have the time to do it. But I mean, the people who did use it though, they did say it was amazing. It's like super simple. Basically, leveraging the power of AI, um, it really helps the loan officer to speed things along and makes their job a little bit easier, right? In terms of um, collecting documents from borrowers, right? In terms of like using AI to calculate income, and it can do that um, to the point where basically the loan officer really doesn't have to do a whole lot. I mean, they just kind of have to review it, right? Review what the AI's decision is, right? Um, so yeah, I thought that was pretty cool, and I look forward to when this new one does roll out, because this one is going to be a full a loan origination system. So it's gonna be pretty cool. I think I'm gonna definitely sign up for this one. So, did you have any thoughts on this announcement?
Yeah, so, what is it? The owner came out and he was like, "Hey, so right now, Arrive is better than Beverly, or what is it called? Is it
Every,
yeah,
every, yeah.
Beverly? Okay, so he came out. He said, but that won't last long, right? We're gaining traction on them in the direction that we're going. We're probably going to be able to beat them out pretty quickly, but there's another application that a lot of people use. I've used Arrive, and I think Arrive is amazing, right?
Mm,
We don't use Arrive, but that was the direction that we were going, is that we were gonna merge over to Arrive.
okay.
However, now that, like, I mean, if there's a new one with AI implemented in there, that changes the game, man. Like, I'm gonna be honest, like, if now I have never used the Beverly system before, but if
Mhm.
you can say the closing date is on this day, and then it just updates the system with it, that's going to be a
Mhm.
game changer,
Yeah.
right?
Right.
Before that, you would have to go, like, these LOSs and these POSs, point of sale and loan originating systems. Um, they are, like, you have to know the application, you have to know the compliance, you have to chase after all of these different things, you have to put the closing date in the right place, and if you don't know how to navigate through it, you're going to have a hard time, right? But
Mhm.
if there's AI involved where you can just talk into it and it'll just input for you, now that's going to be a game changer, right? So,
Yeah.
and
Yeah.
this is the first system with AI, so like, it's going to be a huge step forward, and I hope that it turns out to be really, really good. I don't know, like, right now, I'm not with Nexa, so
Mhm.
I'm not out here trying to, like, we're doing kind of a Nexa explain, and I'm not out here trying to say that Nexa is the best thing since sliced bread. But dude, I'm not gonna lie either. Even owning my own brokerage, doing the things that they're doing would be extremely difficult. So, since it's kind of a done for you platform, it's pretty cool.
Yeah, yeah, and then I just remembered, some of the things that the CEO was talking about that it's gonna do really. It's having 300 some partners, right? Lenders that we're gonna shop across. Well, if you plug in all the loan programs, and it's gonna keep track of like how quickly can they close, right? What's you know how good they are, right? And then when it comes time for you as the LO to match up uh, a a borrower to a lender, now you're going to have not only who has the best rates, but who's actually closing on time, who has the least amount of touches on a file, right? Meaning that the goal is one touch close, right? Like when you submit that file to the lender, the goal is to just get that done without having to get kicked back and forth with the underwriter and say, hey, we need more docs. Hey, we need more docs, right? Um, that's really the goal of AI, and that I think if we can get to that goal of, 1 or even 2 touch close, that's gonna be amazing, right? It's gonna make our lives as LOs a lot easier. So that's just what I think, so. And then, the next thing that, that CEO announced as well is that, they just recently they purchased a loan servicing company, right? And so this is a little bit of a unique move. No other lender owns their own servicing company out there, like, as far as brokers. And very interesting move. And I know you didn't like that at first. Like I was telling you about it, and you're like, no, I don't like that. Um, but we did, and when I told you that, I basically the goal is that when we help the customer with close their loan, usually we're working with them all the way up until the point of closing. Once they close, then it's like, hey, thanks, see you later, bye, and you never talk to them again, right? Um, and if they ever have a question about their loan, they just call the 1-800 number. That's their servicing
Correct.
number, right? So they never talk to you as the LO ever again. And so the idea behind the thought process behind Nexa buying their own service company is that now the LOs can stay connected to the client, right? So that whenever that client has a question about, hey, is my PMI about to drop off? They can call the LO, be like, yeah, can you check? And he'll be like, yep, should they can see the schedule and all that. Or if the client's looking to refinance, right? You know, you can definitely stay on top of that too, right? Or any other major milestones, like if the if the borrower wants to all of a sudden request a payoff, well, now the LO can keep that conversation going and be like, hey, I see you are requesting a payoff. Just curious, what is the purpose, right? Like, are you trying to move? And then maybe they're like, yeah, I'm trying to move. I'm going to sell and then I want to move. Well, if that happens, right? Now you as the LO, you can be like, well, okay, that's awesome. And I wish you luck with that sale. But, or do you want another loan to help to buy the next home? Now you're in play, right? You're still relevant. So you have a chance to get
Yeah,
repeat
ahead of the
business.
game.
Right, right, right. Exactly, exactly. And so it's good for LOs. It's good for the client, right? So it really keeps that connection going. And on top of this, as a LO, I mean, because you're now part of the servicing company, if you choose to be, this is optional. You actually do get paid residuals. So um, you would get paid residual, very very minimal, like maybe $20 per loan per month. But if you're doing 100 loans a year, right, and every loan you do 100, 20 times 100 per month for a whole year, and then times then another year, you're going to get 200 more loans. It does slowly accumulate to quite a lot, right? It's like collecting pennies. So I think that's pretty cool. I don't know. What are your thoughts on that now that you know more about it?
So my thoughts around it is it's still kind of the same. I still think that as a loan officer, I really have no business dealing with the servicing department outside of maybe fixing some things, right? Because there are times where I communicate way more effectively than the customer service rep behind servicing, right? And the what is it? And I agree with him. The owner, he mentioned that, like they have like when it comes to the servicing department, they're trying to keep the cost as low as possible because servicing doesn't make that much money, right? It doesn't make as much money as being the wholesaler, being the underwriter, being the loan officers. It doesn't make that much money, and so they always have to keep costs down, which means that they're reducing the quality of employees. And when they do that, like I'm sure that I have a better communication with my clients than a random servicing person that you're calling on a 1-800 number, right? So
Mm,
from a servicing department, I think like it's extra work, but what I like about it is that, you get to continue to touch base with your clients. In addition to being able to touch base with your clients, you're the one that are able to help them when they're going through either like so I'm here's an example, right? I recently had a client that he reached out to me. He's like, I'm gonna sell my house and I need to pay off. I need that like right now. And I was
Mhm.
like, oh, have you called the servicing department? And he's like, we've been calling them and we can't get a hold of anyone.
No.
And um we've requested payoff online and we've received nothing.
Mhm.
And I can't do anything about it, right? There's nothing I can do about it. If I could have taken 15 minutes to get them a payoff, sent it over and said, "Hey, you're good to go, man." Like, I think that my relationship with them would be a ton better, but I was like, "Yeah, I can't do anything in that department, so you just have to continue to wait on the line." And he's like, "We've been waiting for over an hour and no one's coming on." And I'm like, "Yeah, I mean, that's the number. You're calling the correct number, but you're gonna have to wait." And he was like, "All right, I get it." And then that was the end of the conversation, which wasn't a great conversation. So,
Yeah, yeah. But I mean,
yeah.
the nice part, the CEO also mentioned that, a lot of the servicing work is going to be done by AI mostly. Like, we're not
Mhm.
as LOs. There's really nothing that we're really going to be expected to do. So it'll be cool. Um, we'll check it out when it rolls out. We'll see. We'll see what actually happens.
Mhm, mhm.
But yeah, another option, right? Another option, another avenue of creating another stream of income. So pretty cool. All right. So then brings us to one of the most powerful things that Nexa offers that no other mortgage company out there really offers at this point right now, or I don't know, not that we know of, but so Nexa basically copied the EXP model of revenue share, right? And so basically, if you're not familiar with what revenue share is, it's essentially um, allowing the loan officers, right, who are helping to grow the company by partnering up with other loan officers to come on, right? Um, when you bring on another loan officer, instead of like other companies where you get paid a referral fee, right? You get a referral bonus, right? Bring a partner over, and we'll give you a one-time referral bonus, right? Instead of that, right? Next is like, hey, you know what? If you're gonna help grow the company and uh, by increasing our number of loan officers, which in turn increases the production right of the company, it makes the company more profitable. Um, we're gonna share some of the company's revenue back to you, right? To the people who are helping to grow the company, right? So it's aligned interest, really, is what it is, and not a lot of mortgage places are doing this type of compensation, right? Where it is optional and actually you're not required to do it. Um, but if you do choose to, it can really help make a nice another passive stream of income for you, right? Um, so anything I missed there?
No, I mean, outside of you know, because we're both at EXP already, right? I think that we understand the rev share model pretty well and understand how it can really, really help people and I think engage in people. But my thoughts are this, right? The payout is pretty good, man. Like, when I was listening to him, and I could be 100% wrong, but it sounded like you would get 10 basis points for every transaction that's done.
Mhm.
Now, you gotta remember that loan officers can do more transactions than realtors. And
Right.
so if you multiply it out, like let's say for example, on average, the loan amount is 250,000, you're gonna get a $250
Yeah.
payout
Yeah.
per transaction. If they did 10, like let's just say he's a high producing loan officer, right?
Right.
And they did 10 transactions. And this is just one loan officer that is underneath you. That's 2,500, right?
Right.
A month.
Yeah.
Now,
Let me share the calculator here, so we can go
yeah,
through it.
yeah.
Yeah. So let me bring on the screen. Can you see it?
Yep, yep.
All right. So yeah. So yeah. So this is the rev share calculator here. We're only going to focus on this one here for now. And so at Nexa, the uh the the levels only go three levels down. So three recruits down. So you level one is your direct line, right? Whoever you recruit is your direct line, level one. and then level 2 is your level 1's recruit, right? Becomes level 2 for you, and then this level 2's recruit becomes your level 3, right? So that's how that works. And so what would you say the average monthly volume for, let's use it in Minnesota. Let's say, what is the monthly average volume for LO? What would you say?
Okay, so I think nationwide on average, and I only know this because I used to work in major banks, right?
Okay, sure.
From a banking perspective, in which they're the majority, right? Banks are the majority of the business out there right now,
Right.
or market share.
Okay.
Um, the majority loan officers will do only 3 a month,
Okay.
because that's what they're required to do.
Okay. So 3 homes, 3 loans a month, which would be what in total sales volume? Like, is it 400 still? That's the average price, or well, that's the average price of a home. So what would you say? $300,000 loan amount?
Yeah, yeah, let's use 300,000.
Okay. So 300,000 times 3, right? Because you're doing 3 loans a month, right? It's gonna be
Mhm.
900,000, right? I'm doing this right?
Yep, yep.
Okay. And then so just by doing that, right? And say you bring on 5, right? You bring on 5 and you're line 1, right?
Yeah.
So 10%, 10 bips on those 5 loan officers, and they do 3 a month, you're gonna earn passively 4,500, right? Per
Mhm.
month. That's pretty good. That's really good.
Yeah.
Yeah. I
Yeah, I believe this calculator is based on the assumption that the loan officers you bring on do 12 a month or 12 a year, right? 1 a month,
one a month. What do you mean?
right? Oh, no, no, no. At the bottom, at the bottom, we're using the number of how much they're actually doing, right?
Right,
Okay,
which is 3 loans a month. 3 loans a month times 12,
got it.
right? Right.
Yeah,
So
times 5. Yep, got it, got
right,
it.
right, times 5, right? And
Mhm,
then so once you bring on 5 loan officers that are producers, and they do 3 a month, and now let's say you help them, right? You help them bring on uh what 5 each of their own, right? It should be doable. So now you have 15 in your line 2, right? Is that right? What, 5 and then they each
you
bring
said 3
5?
each? Yeah.
No, 5. Well, what if they you have 5 total, they each bring on 5, so that's 25, right?
Yeah,
Yeah.
that's 25.
Good thing I'm a loan officer. Got I use calculators. So, that changes things. Now this is, like, extremely good already. That's huge, right?
Mhm.
That's like, I don't know, that's
That'll
like a
change people's lives. It'll
yeah,
change people's
yeah,
lives, yeah.
yeah, for sure. I mean, even at 15, when I had it at 15, yo, I'd be happy with that. Come on now. But yeah, and then it gets even better, right? It's like, hey, so you need 10 producers on your level 1 to unlock your level 3 here. So let's make this 10, and then let's just double this number to 30, and then um hopefully those 30 have at least 5 each. That's me 150 on your, yeah, now you're like, now you're yeah, now you can sell your own gas, all right? So, yeah. So
Yeah.
it's pretty insane. I don't know, right? Like, and you were sitting there, you're like, you're looking at me, you're like, dude, I could I know so many loan officers right now. Right?
Yeah.
So it's insane. But so yeah, that's what the passive rev share model looks like, right? And of course, this is on the rosier end, right? Realistically, right? Like, I mean, everybody has to produce, right? So like level 10, all 10 have to produce, right? Otherwise it's not going to work, right? So, but this is the potential here. So, um anything else you want to add about that? Anything I missed?
Nah,
Yeah.
I think, it's a big deal.
Yeah, yeah.
If you're getting paid 300 basis points to 400 basis points, and then you get, a rev share model too,
Oh yeah.
um, like, I was thinking that, dude, they're doing business at a loss, but, you know, The thing is, I think he's okay with it because they have so many different streams of income that it offsets, their all their costs, so they're fine with it. They're fine with operating at a loss. And I can
Right.
definitely say that with my brokerage, I would not operate at a loss, right?
Right.
So I can't imagine anybody else doing this. It's a really cool model. It's a really cool model. So we'll
Yeah.
see if I make a decision to switch over.
All right. Yep. And you know, so like so with rev share is something else, right? It is paid to an LLC. Um, and that LLC will continue to be paid even after you either retire, right? As long as you don't go and compete with Nexa, you don't go join a different lending company. That's what CEO said. You
Mhm,
don't become a
mhm,
competitor. You're going to continue to earn, right? And if you, in the case that you do happen to pass away, this is something that since it's being paid to an LLC, LLCs don't die, right? They don't die automatically. Somebody has to kill the LLC, right? Um,
mhm,
so what that means is you can actually assign a beneficiary to your LLC, like somebody in your family, your spouse, your children, right? And even after you've passed away, they will continue to get paid as long as you have loan officers in your downline, right? And something very cool is that in the event that you do pass away, um, they automatically open up all three of your levels for you for payout, which is amazing. Because what if you didn't have that many in your level in your overall organization, right? You didn't have that many in your level one, right? But let's say that you have a beast recruiter in your level one, and he has like hundreds in his downline in level two and level three. That's gonna be amazing for you, right? For your family. So I think that's super powerful. That's really cool that they even did that change, that they're willing to do that. That's very respectable. So all right. So enough about that. Let me stop sharing. All right. Okay. So definitely the passive income is something that you can also work on at the same time as your active income. Um, so that's something that most people should definitely. There's no reason why you shouldn't be doing it. Really, the way I look at it, a lot of people seem to think, I'll wait until like I'm kind of like coasting until I'm like ready to retire, then I'll go recruit. Well, at that point, you could have done it the whole time that you were actually actively working, right? When people were like, when other loan officers were like, I want to learn from you, right? I want you to teach me, right? That's perfect time to to attract people to join you, right? So there's no reason why you shouldn't be, helping others. I think one of the most, like saying is, if you help enough people get what they want, right? You'll get more than what you've ever wanted, right? And so that's really what RevShare is about, right? Align interest, uh, helping other people to be successful. It's going to be part of your success, right? So,
mhm,
yeah.
mhm,
All right, and then the last thing that we kind of talked about really was um, big change in the real estate game is that helping to compensate um, or to offer compensation for others who are either licensed as a loan officer or even unlicensed, right? So it is well known that in the lending world, you're not supposed to get compensation if you don't have a even if you have a LO license, you can't just simply refer to another LO, right? That's not allowed, right? Um, but if you are on the realtor side, realtors can refer business back and forth all the time, right? But loan officers
mhm,
can't do that, right? So it's illegal, right? But there are some new programs out there that are allowing realtors, right, the opportunity to earn. Um, and so one of the most common ways is simply going out to talk to realtors and saying, "Hey, have you ever thought about getting your getting your loan officer license on top of having your realtor license?" Right? And
mhm, mhm.
so that's what we refer to as a relo. So a professional is somebody who has the real estate license slash loan officer license, right? Um,
Mhm.
So once you get that, at Nexa, we do have this program where if you're a really busy realtor, you don't want to do much of um, the loan officer like actual heavy lifting, the major work of being a loan officer. You can
Mhm,
start the loan, right? You can start the loan, take the application, and then basically your assistant comes in and takes over the rest, right? And then you would get paid, right? Um, so that's one way to do it. The other way is if you do happen to be crazy like us, where you want to actually do the full loan work and be the realtor at the same time, you could. That's where you're going to keep the most of compensation, right? You're going to keep both
mhm,
sides of the commission. You're going to keep the realtor commission and the loan officer commission because now you're working as both, right? So
mhm.
if you're very motivated and you're kind of a little crazy, you want to do a lot of work, then yeah, do both, right? Which is awesome. That's what me and Johnny both do. So, yeah, we're a little crazy. And then there is the other option that is just recently rolled out called BDM, stands for Business Development Manager. You don't need a license, right, to get compensated. Essentially, what it is you become a part-time employee for Nexa, and your role is marketing and relationships. You're building, you're finding leads out there for your loan officer, and when the loan officer closes those leads, those loans, you're going to earn a very small referral compensation for that. So anything from 50 to um, 100 bips or whatever the agreement is, right, that you have with them. But the most important thing is that you don't need to be licensed, so you don't have to take the MLO exam, right? And then the very last option here is a JV agreement, right? So really, what it is you, me or Johnny or whoever will come in and we'll partner with you. We'll JV, do a joint venture LLC, where we create a brokerage together that will pretty much handle all your real estate leads that come through, right? So you're going to work the real estate side, but then at the same time, because now when you co-own this mortgage company with us, you could, um, basically do a referral to that client and say, hey, by the way, we do own this mortgage company. You don't have to use us, but if you do, you could, right? So what's that called? Affiliated business. Right. We have to,
Yeah, affiliate business agreements, yeah.
right. We have to disclose that, hey, we do own this other company. And if you do decide to use us, we're not requiring you to use us, but if you do decide to use us, we are going to get paid as well, right?
Mhm, mhm,
So just a full disclosure to our clients, right? And
mhm.
so that is also a very good option that doesn't require you as a realtor or a broker owner of a real estate brokerage to have a license, right? And now you can own a mortgage company, right? Um, so what are we missing here, Johnny? What's the biggest advantage of doing all this?
I mean, I think the the biggest advantage, and I want to clarify one thing, right? The JV, right? It has to be a real business, right? It can't be um like funneling leads and paid on leads, right? It has to actually be a real business. And I think most of this stuff, like you have to be really working with us or for us, like as a W-2 employee in some cases, or a 1099 employee to make something like this work. And so
Mhm,
I think that the big thing is that um we're looking at doing these things. And I think that if we're doing these and we're working with specific brokerages or specific teams that are just mass producing, like we're going to be able to partner up and they're going to get money back where they never have received money before. Right. So their mortgage company, right, working with us is going to be able to make money that they've never seen before. Right. Where they're just handing it off to somebody else and they're not getting any portion of it back. So I think
mhm,
that it's a pretty big deal. It's a big deal that we can do something like this. It's a big deal that the team members who are going to be working on these different things is going to be able to make more money. I think the production. I also think that There like, okay, so something that the CEO mentioned, right? Mike mentioned, is that he actually gives leads out to realtors, right? He gets in front of the leads and he gives leads to realtors.
Mhm.
So the way that we're looking at it is that we'll give leads to realtors. Realtor will then come and give us the ability to work with them and partner with them on a mortgage brokerage, right? Or whatever the case is, and they might come and be our business. Like we might give them the lead, but they might be the one that closes the leads. If they're a part of our mortgage company working as a W-2 employee, if they're the business development person, they're going to bring in the business and then we'll close out the deal. And so everybody's getting paid on every different level. And of course, this is not like they're not getting paid for referrals, right? Where that's not what we're trying to
Right.
do. But what we're trying to do is build businesses that's cohesive with one another so that everybody wins in the process. Because I can tell you that for the deals that I do, where I do both the realty and the being the lender, my clients get way more discount. Right. When I'm both, I'm able to give them like I think the biggest one, they save like $25,000. Right.
Mm.
Um, and so my thoughts are is that if they were to come and we were to partner up, we could save our clients so much more money that they could buy a better house, right? They would have more down payment, right? There's so many different things that we can do. We can start functioning like builders, right? Where they're offering rates that are just crazy. And so
Mm.
um there's so much that you could do with it, right? And I'm already doing some of this on my own, and I've been, everything that Mike talked about when it comes to these different business ideas, I've already thought of the same thing. I just can't implement it because I'm not at scale where
Mm.
he's been working on it for at least 10 more years than I have. And so he's fully at scale and he's able to then implement all of these things. And so for people to come in, if you're a realtor or if you're a loan officer and you're thinking about these kind of things, man, like I think you need to hit us up so that we can get you guys connected. Even though, like I said, I'm not with Nexa, even though I'm not with Nexa, I can still get you connected to the right person. I actually have Mike's cell phone number now. Um, like you never know. I might just give him a call tonight, right? I was told that he's not that busy on Sundays.
That is true, and he's on Arizona time, so you're good. You can call him right now. But yeah, yeah. So I mean, the biggest thing, right, like you mentioned, is that the biggest value add that we're bringing here with these opportunities. If you're already in the business as a realtor, as a broker owner of a real estate company, you understand that when you're doing business, essentially there's the real estate side, right? And then there's the loan side. And us in the real estate side, we have the buyer, right? We're bringing that,
Mhm,
and
mhm,
we're bringing the accepted offer. We're bringing the buyer, right? And then we hand it to a lender, right? Let's just say any kind of lender, whether it's a bank, credit union, retail, whatever, broker, right? So the minute you hand it over, I mean, you worked really hard to get this deal under contract, to get this buyer to trust you, right? Build that relationship, and you know, essentially, you're just handing the other half of the commission to the lender, right? And so now, if you choose to, you could be, compensated to do business with either a loan officer you partner with, or if you do the JV, then you co-own that company, right? So um, there's a lot of money that could be missing, right? That you're leaving on the table, right? And so let's just visualize that for you guys. It might be a little bit hard, but let's share the calculator again, and then so put more money in your pocket over here, right? So that's the one that we're gonna look at right now. And so, you know, let's say your monthly volume, right? Um, what do you think a good monthly volume is like for an agent? Like what, two, two homes a month?
an agent?
Yeah.
I think one, dude. I
What?
think one a
All right,
month.
one a month.
And I think
So
and I think on if you're talking about like oh, you're talking about yeah, yeah. I think for the average agent, it's probably one a month. But if you're a high producing agent, you're probably 20
what?
plus deals. And so you're gonna be doing more, right?
Right, because one a month is 12 deals. Let's just say you know
20.
400, 20. No, like this is like in hundreds of thousands.
I
'Cause
see what you're
you're
saying.
oh,
Like
you're saying 20 a year?
transactions.
20 a
Yeah.
year? Okay, 20 a year comes out to 1.66. And so let's say 400,000, or is that too high, you think, is for the average price?
Yeah, I think that's too high. I think we could stick with like 300 should
300,
be yeah,
300,000?
across the US, it should be pretty
Alright.
average.
So that comes out to 500,000 actually. That
Mhm,
comes out
mhm.
perfectly to 500,000.
Yeah.
Um, okay. So, I mean, if you're bringing in $500,000 a month, right? You're not making anything on the lens side, right? But if you bring it over Nexa and you're gonna get paid 50 bips, right? 50 bips on each one of those. 50 bips is half a percent, by the way, right? Half a percent of the volume. That's $2,500 a month. You know,
Mhm. That's a
that's
nice
not.
car. That's a Ferrari?
Is it a Ferrari? I don't know. I don't know.
It's a
I don't
lower
know.
end Ferrari. Lower end used Ferrari.
2,500. That would get you a $300,000 house in Milwaukee.
Yeah, yeah.
Uh, yeah, but and then
Mhm.
if you are a top producer, I mean, you're probably, what is it? Maybe you're around 750, right? I don't know. Okay, so you're almost 4,000, right? But if you're a brokerage, right, and you're doing your agents, these are all your agents that are doing the volume. I mean, I don't know, like depends. Obviously, depends on the size of your brokerage, right? But I don't know. How much do you think? How many transactions do you think a brokerage can push out a month?
I think let's consider the smaller brokers, right? And so let's do 50. Let's do 50 per
Wow,
month, right?
50 is a lot. Okay, so
You
that's
think so?
15 million. 15 million. So every month, that's 15 million in sales volume. So this is the amount of money that a brokerage, a small brokerage that brings 15 million sales volume a month would be missing out on, right? And
Yeah.
if you're a broker owner, 75,000 you a month that you could be leaving on the table, that could come back and be used for your agent's marketing dollars for your
Mhm.
right market your brokerage, help your agents out, right?
Mhm. Mhm.
More tech, more support for them, right?
More team events, more
Exactly.
customer what is it?
Customer appreciation events.
Yeah, customer appreciation events.
Oh, that's massive, man. Even let's do 10 million. Yeah. That's pretty good. So
Yeah.
10 million a month. I mean, if your brokerage is doing 10 million a month, or your team, there's teams out there doing this, right? You don't even have to be a
Mhm.
brokerage. You
Yep.
could be a team, and if you're a team, you're doing 10 million a month, you're leaving $50,000 on the table a month, right?
Yep.
That's crazy. So, I mean, if you're interested, you could partner up with somebody like us, either as a BDM, as a JV, or go get your own license, right? And we'll show you the way. So, um, enough of that. We'll take that off the screen here. Yeah. So I don't know. That's pretty much all the things that we learned, and I think that last one, for me was pretty shocking, right? It's like it's mind blowing. Like if you really do the volume numbers, right? There's a lot of money being left on the table. So, what was your biggest takeaway?
I think to be honest, because I'm already broker, right? My
Yeah.
biggest takeaway is he's implemented everything that I want to.
Mhm.
So for me, it would be a huge plug and play. I would be able to expand my business twice as fast, if not 3 times as fast.
Mm,
And help that much more people. Like, cause the big thing is that, like, look, I have my own brokerage. I'm making decent money.
mhm.
Yeah, my family's, we eat well. But man, like, I could get a lot of more people eating well
Yeah,
in this environment. And so when you
yeah.
when you think about it, like, there's so many people to help. At least that's how I look at it. I grew up in a community that wasn't great, right? We were surrounded by people who just didn't have enough. And if I could just show some people how to do this and how to make enough, I think that that'd be a game changer for me. Just for personal reasons. I think my biggest surprise was really um, that they had these models all in place already,
Mm,
right? I didn't think anybody else was going to do something like this. I thought that everybody is just out there just trying to do just trying to do loans, right?
mm.
And they're like, oh yeah, we could just get, like, most people when they come to me, right? Because there are people who try to recruit me, right?
Yeah, yeah,
Their
yeah.
biggest recruiting sale is, look, I can get you paid more. I'm not like, well, okay, show me, right? And they're like, we're gonna give you 275 basis points. And I'm like, guys, like, I'm a broker.
Yeah.
That's not gonna work for me. I'm already doing it. My business is good. But Nexa is on a different level. Like, they have plans implemented. They have the accounting behind it already, right? And then
Mm.
it just allows me to jump in and plug and play and do the things that I was already planning on doing, which was everything that they're currently doing right now. My thoughts, I think they have like over 3,000 loan officers.
3,700 right now.
Okay, 3,700. Um, I think they're gonna, like, be like the next EXP, dude. Like, EXP started out really small, but now they're at like 80,000 realtors.
Yeah.
And I think that next is gonna be the same thing, right? They're gonna be in the, like, tens of thousands of loan officers joining them because, um, like, I mean, the way I look at it, hey, if you can't beat them, you need to join them, right? um, so
Yeah, yeah, yeah. So that means you're gonna be joining soon. All right, cool.
we'll see, we'll see.
Yeah,
The
yeah, yeah.
likelihood
No, I
is
mean,
yes, because
yeah, I
yeah.
mean, like for like just to kind of echo what you've been saying is like you know um there's lots of companies out there that do recruit, right? And their pitch is always like, oh, let me help you do more production, right? That's
Mm,
like, okay, well, that's cool, but what else can you do? Right? What else can you help me do? Or the other one is retail, on the loan officer side, retail. Oh, yeah, come work for us. We'll give you a 100K salary, right?
mm,
And then we'll give you like 75 bips. Right? It's like, okay, great. Yeah, if I want to sit behind a desk 9 to 5, right? Sure. But I want to do that, right? Um, so that's kind of the biggest eye opener for me when I came to the industry is that there's such differences between the pay, the compensation, right?
mm, mm,
Um, and then of course how they operate, do business. But yeah, I mean, like I said earlier, I kind of feel like I'm spoiled when I started at Nexa because I started with 275 bips, right? Like
mhm.
if somebody tried to recruit me, they're like, "Oh, we're gonna give you 100." I'm like, "Hell no!" You know? Like, no, that's stupid. Shut up. But yeah, and then the nice part is that Nexa, just like EXP, they're not just there to help you produce, right? Like they can offer you so much more. Like, for example, something that currently EXP does that Nexa doesn't do, they actually offer equity, right? They offer ownership, right? We're all owners at EXP. We get stock, right? And maybe who knows? Maybe one day Nexa will get there when they go public, right? Or when that happens, right? Maybe the LOs will finally get some kind of stock, right? And Nexa is 10 years, roughly 10 years behind EXP, right? On the timeline, right? But things move fast. Nexa has changed their comp schedule, their comp plan, right? I think what did Mike say, like 12 times already, 13 times
Mhm.
already,
13.
right?
Yeah, he's at 13.
Yeah.
Yeah.
So they keep changing the company. They keep making things better, and each time it was better for the LO, right?
Mhm,
Uh,
mhm,
and that's kind of like the message here at Nexa, at EXP. It's like these companies were built by actual loan officers, built by actual real estate agents, right? They worked in the industry. They were not just like investors or you know, like some kind of hedge fund owners, right, that are just penny pitching, right, that are just kind of moving the beans along. How can I squeeze more profit out of my LOs, out of my agents, right? They're building these companies for us, right? The actual people who are doing the thing, right? And I
mhm,
think
mhm.
that's super powerful, and that's something that other companies can't say they're doing, right? um, and then, you know, even like independent mortgage brokers, independent real estate brokers, you are not going to see one of them ever give money back to the LOs that the way the rev share models do, right? Because
Mhm.
they're trying to keep all that to themselves, right? It's like, nah, that's my money. I'm not trying to give that back to you, right? Um, that's the truth. That's
Dude,
how it
so
goes.
it's not even that it's their money, it's that they have a cost that they incur, right?
Mhm.
They have a cost that they incur when they do a transaction, so they can't give you all that money back.
Mm,
Where, like I said to you, Nexa is operating at a loss, and they're okay with that, right? Because they have other businesses that offsets that
that's
cost.
true. That's true. Yep.
So, like, you can meet the nicest mortgage broker, you know, myself included, and I can't pay you, 275 basis points because that's what we're making on every transaction. And I pay for the credit reports. I
Right.
pay for the cost of making sure that your NMLS is good, that you're being sponsored. I pay for the
Mm,
emails system, the application system, I mean, you name it. I cannot give you 275 basis points, right?
right. Right. Right.
Now, um, like I said, Nexa is okay with operating at a loss because they make money elsewhere. Um, I think that that's huge. That's huge. Like I wish I could do the same thing.
Right.
But I'm just, dude, one person compared to, 3,000 people. You just can't
Yeah.
scale as fast, right?
Right. Right. Right.
So, yeah.
And there's a lot of things that come along with being so big too, right? You get discount by volume, right? Especially by production, right? If you do so
Mhm,
much
mhm.
business with a lender, you better believe they're willing to do things for you, right? Um,
Mhm,
Same with like credit pulls. You mentioned credit pulls; they're expensive as ever, but
mhm,
because just because Nexa has such a big number of LOs, we get we get really good pricing, right? That other smaller ones, other small brokers are not gonna they're not gonna get. Um, so it's the benefit of scale, right? Like you mentioned.
mhm.
So um yeah, so I mean that was pretty much it. I don't know. I don't have anything else to say about this. That's a good episode.
Yeah, no, I think if you have more questions, right, reach out to us, have conversations with us. Being able to sit through it and see what it is that Nexa is doing, it's super powerful. Even if I don't join, I wouldn't mind, sending loan officers over there. It's I don't know. Like, and if I decide to go over there and you want to join my team, hit me up because we're about to take this to a whole different level to where our realtors will get leads, our loan officers will get leads. And my thoughts are is that look, we're gonna get to a point where our organization is gonna generate all of the leads and you guys would just close them out. Right. I think that it's gonna be super powerful. I haven't even told you all the details about what I'm thinking because in the meantime, I got time to think on the plane. I got time to think yesterday,
Uh,
and some more time to think today. Some time to talk to Claude, right, dude?
okay, okay.
Um,
You've been
you're
working.
gonna
You've been working.
see, like when I break it down to you, you're gonna be like, dang, like by the end of next year, we're gonna be making like 2 mil a year, dude.
Mm. Oh
And
shit. Okay. I look forward to it. We gotta talk soon. We'll talk soon.
yeah, it's gonna be crazy, dude. It's gonna be crazy.
All right. Well, yeah, like Johnny said, you know, if you guys have any questions, I mean, we're still figuring things out, you know, but there are big things coming. So if you want to be a part of it, let us know. Um, yeah. All right. We'll see you guys in the next episode. there's anything else you want to learn about, anything you want to see in the future, drop us in the comments. Give a shout out to Wes here in the comments saying thanks for going live, and Emerald Jules. See you guys later. Peace.